feeling the pinch. And the global financial markets are also suffering. Risky loans have been packaged and sold around the world. Mortgage companies have collapsed. Financial firms have recorded losses in the tens of billions, and there's predictions for tens of billions more. Central banks have had to step in to keep the system running, and banks are reluctant to give out loans. So companies are finding it harder and harder to get the capital they need to grow and create new jobs, even if they're not in the home industry. Now, who's exactly to blame for the housing crisis? Well, that's always a question that the press and people ask, and I think there's plenty of blame to go around. Responsibility belongs to mortgage lenders and brokers who irresponsibly lowered underwriting standards, pushed risky mortgages, and hid the details in the fine print. Responsibility belongs to the administration and to regulators who failed to provide adequate oversight and who failed to respond to the chorus of reports that millions of families were being taken advantage of. Responsibility belongs to the rating agencies who woefully underestimated the risks involved in mortgage securities. And certainly borrowers share responsibility as well. Home buyers who paid extra fees to avoid documenting their income should have known they were getting in over their heads. Speculators who were busy buying 2, 3, 4 houses to sell for a quick buck don't deserve our sympathy. But finally, responsibility also belongs to Wall Street, which not only enabled but often encouraged reckless mortgage lending. Mortgage lenders didn't have balance sheets big enough to write millions of loans on their own. So Wall Street originated and packaged the loans that common sense warned might very well have ended in collapse and foreclosure. Some people might say Wall Street only helped to distribute risk. Well, I believe Wall Street shifted risk away from people who knew what was going on onto people who did not. Wall Street may not have created the foreclosure crisis, but Wall Street certainly had a hand in making it worse. We also must recognize, though, that good things have happened in the housing market. Home ownership is at the heart of the American dream, and ownership rates rose to a record 69% in 2006. That means millions of new stakeholders in their communities. The largest gains were among low-income and minority families. The challenge for us is to preserve the best of this system, which has allowed people to own their own homes while getting rid of the abuses. And to do that, we need to look at this problem, as complex as it is, honestly. We also need a president who understands the complexity and magnitude of the challenges we face, because obviously it's not only about the mortgage industry and the credit crunch, it's about our debt, about the declining dollar, about all the challenges we face in the global economy. I'm confident we can navigate through this, but we can't do so acting like ostriches or in a fit of denial. We have to be willing to roll up our sleeves and start doing what we do better than anybody in the world, and that is solving problems. Earlier this week, I wrote to Treasury Secretary Paulson, urging him to fashion an agreement with the mortgage industry and Wall Street that matches the scale of the problem. I'm heartened that the administration has heeded an earlier call of mine to convene a crisis conference of housing stakeholders, lenders, investors, mortgage servicers, regulators, representatives of homeowners, and others, to convert unworkable mortgages into stable loans that families can afford. This is a moment for shared responsibility in America. Investors, lenders, and homeowners all have a part to play and sacrifices to make. If the agreement is inadequate or the talks fail outright, the cost to our economy will only increase. For this crisis conference to succeed, Wall Street must be on board. Now, Wall Street has a responsibility for the past as well as an enormous stake in the future. So today I'm calling on investors who control the mortgages that need modifying to be part of the solution. You're at the end of a long chain of decision-making and responsibility. But without your cooperation, a voluntary solution can be of limited effectiveness. I urge Wall Street and the mortgage industry to voluntarily agree to the following 3 steps. First, We need a moratorium of at least 90 days on foreclosures of subprime owner-occupied homes. The moratorium will stop foreclosures until lenders and servicers have contacted borrowers and frozen mortgage rates. It will also give financial counselors time to work with families. Second, we need to freeze the monthly rate on subprime adjustable rate mortgages, with the freeze lasting at least 5 years until the mortgages have been converted into affordable fixed-rate loans. A rate freeze is critical. An average of $30 billion in loans will reset each month next year, and the average reset will increase monthly payments by 30 to 40%. These rate resets are the major driver of the foreclosure costs. The long rate freeze will give the housing market time to stabilize. It'll give families an opportunity to rebuild equity in their homes. It'll also give the mortgage industry the time and incentive to convert mortgages that were designed to fail into loans that actually can be repaid. Third, the mortgage industry must provide status reports on the number of mortgages it is modifying. Accountability is essential. Despite all the media coverage, despite all the hearings, despite the Secretary of the Treasury, despite all that has gone on in the last 30 to 60 days, the mortgage industry has only modified about 1% of at-risk mortgages this year. That is simply not enough. Now, I hope everyone will voluntarily agree to these steps because we cannot fail at this. The costs are just too high. If we cannot reach a voluntary agreement, I will consider legislation to address the problem. Mortgage servicers can work with borrowers to modify their mortgages. In the process, they can save families their homes, save investors from losses down the road, and help the economy. But this is uncharted territory for them, and many are worried about opening themselves up to lawsuits from the investors who actually own the loans. I'm prepared to consider giving legal protection to servicers and others who administer these loans and who do the right thing by balancing the interests of homeowners, the investors, and our economy. All of these proposals build on the work I've done throughout this year to urge immediate action on problems regarding housing. I've called on the mortgage industry to observe a foreclosure timeout. I've put forward a plan to crack down on unscrupulous mortgage brokers, to end lending abuses, and expand the financial counseling programs that have been shown to reduce defaults and foreclosures. I propose that we allow the state housing finance agencies to issue tax-exempt bonds to help families refinance their mortgages. On Monday, the Bush administration said it will give this idea a try, and I'm pleased to hear that. But I wish they'd done it when I proposed it 2 months ago and more than 225,000 foreclosure notices ago. While we work to solve the immediate housing problem, I'm also calling on the administration, the regulators, and the mortgage industry to ensure that the abuses of recent years don't happen again. We need an industry-wide commitment to tightening underwriting standards and disclosure obligations. We need to vigorously enforce federal prohibitions against abusive lending practices. And we need to eliminate prepayment penalties. You know, this has been one of the most heartbreaking elements of this crisis. I did an event about this down in Orlando, Florida, early last spring, talking with a lot of homeowners who had gotten into subprime mortgages. They fit the profile. Many were first-time homeowners. One got in trouble because he thought he was doing the right thing. His family and everyone told him, well, as much money as you can save, pay off the loan as fast as possible. So he started putting more and more money aside to begin paying over what his mortgage payment was, only to find out he had triggered the prepayment penalties and found himself with an increasing interest rate that forced him into foreclosure. We obviously need to clean up the standards and make all of the disclosures much more understandable to everyone. But we do need to prosecute mortgage servicing fraud and foreclosure rescue fraud to the fullest extent of the law. And we certainly need to expand financial counseling for homeowners and buyers. What I'm proposing is a comprehensive workout, not a bailout, of our most pressing economic problem. And I do hope that many of